All right. Good morning. Good morning. All right. So things got a little ugly yesterday. Not too bad. Getting closer to I guess a more critical point. S and P 500. We got to tag that 500, that 50 MA, but yeah, didn't seem like this was going to get going a few weeks ago when we were talking about why the market would get in some corrective mode. If you remember, the internals were up here, and it just hung out up there rather than pulling back. It just chopped sideways, back and forth when the internals, um, got to that extreme. We're saying, hey, there's going to be a correction here of some sorts. And over time, it seemed like, oh, all right, maybe it's just going to be a time correction. That's bullish, and prices will go up through 4,200 to, just come up into that, not this area there. You know what I mean? On the SPX, further over there to the left, maybe get through it. And I was surprised to see this yesterday in the morning. I don't know whether it was a mistake in the data. Then in the morning there was a lot of call activity. And let's see, is it this chart? No, hold on. This one. This one looks more normal. So this one is a total put call ratio, and this is the equity put call ratio. And the data was correct, Alex is saying. It was kind of weird, right? I was like, market gapping down and call buying, that's got to be like a death wish. Anyway, that was weird. Anyway, the equity kind of looks more normal, but anyway, that was up at an extreme. That was at an extreme. The breadth was at an extreme, and now breadth is way down here. So now what? You're out of alignment, and you see where the breadth was on a closing basis. Assuming SPX, I got bonds here, which are gapping down a little bit, so a little reprieve for the market. It's an obvious place for SPX to come down here to that 50 MA, or maybe in between the 50 and the 200, since this low here with this bottoming tail bar is the actual support. So institutions will be watching the 50. Maybe it stabilizes there, but between the two MAs, the red one is the 200, is this. Oh, it's not a pivot on here because there's only two to the left, but intraday, it's going to be a significant point. And so even if this tags down here, what we will be looking for, and assuming that may not be the bottom, right? We don't know or not yet. We'll see what happens when it gets there. But what typically happens in a situation like this is that breadth gets down here. You see it's close to minus 300. Inevitably, almost every time, maybe not the next day, if that gets close to 300, market's going to bounce. Right? And this is not going to get down here when it bounces. Highly unlikely. So in the coming days or next week, when you see this at the zero line, and this isn't here yet, that'll line up with a sell setup in the market. That's historically the way it plays out. So let's get to the other markets. Right. This, greater than 100% retracement. So with that concept, and it went from here all the way above the pivot. Today is just the beginning. It obviously could go higher, but once it gets above that pivot, the next part of the thought process is, which is created based on historical patterns, is momentum stalls. And we haven't seen the stall yet, meaning, well, today's gapping down. This could go higher today, so we'll see. Okay, so that's putting pressure, as expected it would. Dollar is kind of grinding up. That's putting pressure. That's not at the pivot yet. And you start hearing, you've heard now these Fed speakers and are saying, oh, we have to be more aggressive. We got to get to 2%. That's all well and good. But the markets, as you know, institutions were thinking that they were going to start to back off. And now they're saying, we ain't backing off. So more rate hikes. Market don't like that. Going to put pressure on technology. And which had a heck of a run. And now you got this topping pattern here and pulling back. There's more downside. Let's say the 50 and 200, just congestion over here, give or take, would be a logical spot. Eyeballing that. It's kind of like I don't know, looks like more than 50% retracement, but somewhere in here, what would make sense for some targeted area where we start looking a little bit more aggressively for longs, with ideally the internals lining up appropriately. Yeah, I don't think it's going to hold on to that 400, Don. Yesterday, spiders got down there, and that open interest there at 4,000 is still pretty chunky on SPX. It's over 100,000 on the puts and calls. Oh, anyway, so that got a little below that, and there's nothing to the left here. It went through here, So, option activity is one piece of information. That doesn't create a strategy, and neither does a moving average. It's an agreement of information coming together, technical information. And so with that being said, with this pattern, you think, okay, rallies will get sold. It may go sideways today since it was a big move and it's several days from here, where it goes down ultimately to somewhere in here. Right. Well, there's that bottoming tail bar I was looking at on SXPX on the internals chart, but maybe it stops there. The 200 is there. Maybe it overshoots it and comes all the way down to this significant point. And so we don't know. We're in the middle of no man's land, so to speak. We know initially the 50 MA will be a target, and in between the 50 and the 200, and that 4,000 on SPX being usually what they call it, getting pinned there, where you got this open interest at one level. The battle will begin. What's Fabio asking me? What is the tick NYSE and how is it used for day trading? When Dan is talking, I'll see if I can find a video for you. I don't have the time to get an explanation on that, but I have a video that'll explain it and how to use it. But hey, come into the room. We answer questions besides trading every day, education. All right. So where are we at here? In the bottom of the wide range bar. All right. Oh, look at this. Austin has it. You're the man, Austin. Thank you so much. Look at that. Somebody in the green room had it handy. All right. Okay. So it was below. Now it's in the bottom. Those of you that have been with me for a while, and Dan, we say, hey, factory work, the middle of that bar, give or take. So now the question is with this 400 is, does it hang there? Can it get up above it in any significant way? Right? The halfway mark of that bar is kind of like our, subjective line in the sand to say, hey, if this thing's really weak, it'll stay in the lower half or the lower third. So if it hangs here for a while, right, like today, maybe it just hangs there when you get a 1, 2, 3 kind of continuation, or some kind of continuation pattern, that it'll take it down to these levels. So today could be a choppy go nowhere kind of day. All right, let me look at the futures before we get to SPX, and I see Jake has already given me a number. So the futures are at the 50 MA. How meaningful is that? Well, it's at 4,000. It's meaningful to futures traders, right? Just like if you were looking at a chart of the euro or the pound, it's useful and important to the people that are looking at it. Question is, are there more people looking at futures, or are there more people looking at SPX? I say SPX. The world is looking at SPX. I'm not saying that banks and institutions and so on don't, but all that giant millions and millions of dollars of options activity revolves around this. And strategies revolve around this. So while the futures market is something to consider keeping an eye on, in the end, this is, 800-pound gorilla, so to speak. So pivot is down here in between the moving averages, 39.60. I think that is where prices need to get down to, because price is king. Moving averages, while useful, are subjective. And you see my cursor, the 50 MA is lined up with nothing. The 200 MA is lined up with that pivot down there, give or take a few points. So somewhere in here is where there'll be willing buyers. Now, for SPX, so if there was premium, and Jake likes the upside better, 40.75, 40.75, that's doable. That's definitely doable, 40.75. And I had written down 39.30, 39.35, which is below the 200 MA. So whatever your preference is, this is down a lot. I don't think it can go down that much today. There is FOMC minutes at 2:00. That could rattle the markets, or maybe not. Keep an eye on that. So ideally, maybe best to be out before 2:00. But I don't think it's going down here. And I don't think it's going below here. And I don't think it's going up there either. That's a reasonable thought. Right? Sometimes Dan asks me about some of his credit spreads, and it's like, okay, this company's going to report earnings, crazy stuff can happen. And, it's not like I know what's going to happen, but I say the trade is reasonable. And it's like what I'm thinking here. These things are reasonable, that they're not going to get there. All right. NASDAQ futures, not at the 200 yet. 12,000, big number. Here are the Qs, right? Somewhere down here, down at the 200 MA, there's a pivot. So there are upside targets. For SPX, you want to be above the high of that red bar. Okay. You want to be the high of that red bar. Right. So definitely above 40.50, somewhere up in there. All right. We looked at those. Diamonds finally gave it up. Boom. That's got to go down there, maybe lower. It's going to be interesting to see how much things get out of hand here. There's the transports, moving down toward that support. Everything's going lower. All right. Bitcoin held up pretty darn well. And gold beginning to stabilize. Oh, this is stabilizing in the appropriate place. But remember, this thing is not going to advance much. So if you're going to trade gold, keep an eye on UUP or the euro to see what the dollar is doing. Right. This goes up, gold is not going to start going higher. Or silver. Right. So what we would look for, see, with this pattern coming down here to support, right, we would look, maybe the dollar goes up. Right, this comes down and forms a retest pattern. That could be something that could set up with the intermarket relationships aligned. And right, this is what you want to keep an eye on with this, right, which we talked about. whether it does this or whether it flips back up. I don't know yet. Right. But it's stabilizing in the middle. So we'll keep an eye on that. All yours, Dan.
Greg, are you done? I didn't hear you.
Yes. Yeah, I said it.
Oh, yeah, I just didn't hear it. All right. So we only did one earnings trade yesterday, although there's a bunch of them. And a lot of them, it's the same old drill when we go through credit spreads. It's liquidity, days to expiration, and juice for the risk of the pattern and DTE. This is the only one we did. We did the 67.5 way the heck down here. I see one little print here, but I looked at level 1 and it looks fine. So I'll keep an eye on that, obviously. Let's look at these earnings trades. And anything else you have? Yeah, Walmart, I posted. This would be a beautiful 1, 2, 3. And, for puts, I looked this morning, doing a put spread for next week. And it was 20 cents for 9 DTE. And so that the same problem yesterday. I was looking for call spreads and you go look at the juice and you get disappointed. And so that, if you want to play, you either take the juice or go out to next week. But yeah, Walmart, beautiful gap reversal on earnings. Look at the volume pickup. And there's a price void. So ideally we want a 1, 2, 3, which is the inside bar in the upper third. PSA. Today we're talking about MT Live classical patterns. That's kind of what this is. This one's a little bigger, but here's a bull flag right here. Here's your flag hole. Here's your 30-degree consolidation. This is just a bigger, messier consolidation, but I still have a bullish bias if it can break out. And so that could be a 30-minute high, put spread under last week's low. And W, 183, big gap, incredible run off this low, but there's really no pattern that I see to do anything. Fleur, it's messy trading range. I see one print up there. Wing, yeah, 186, but gap's too big, Patrick. I don't know what to do with that. But it's bullish, daily, weekly, monthly, that's for sure. Wow, look at this thing. Just a couple months ago it was $70. And now it's 185. That is an amazing run, particularly relative to the market. And it trades like garbage, no pattern. Keys getting whacked, same. I mean, just look at these overlapping bars. That I guess have absolutely zero desire in trading something like that. Now it's wow, it's gapping way the heck down here. But this could fit in the candidate of it's an excessive gap. Let's see if more buyers step up. And if they step up, then maybe do a 2 DTE put spread. This thing's getting whacked pretty good too, CSGP. Another one maybe, gapping down $10. Let's see if buyers want to step up. Yeah, chicken wings, you're right. Do you remember when it was burritos? CMG, right? Chipotle, it's over $1,700 stock. S back. I can't tell where you're opening. Now, this would be an ideal candidate. Let's say it was gapping down here to 260. That's prior low. That would be what we call a gap and crap if it can then bounce. I'll put that in another window. Fang. Opening relative just up a few pennies. This was one I was considering at Condor yesterday, but didn't want to hold it 24. Well, didn't want to sell 24-day. Coin here also was a Condor I was thinking about yesterday, which would have been a perfect. You Condors, you want to open flat, because then you're getting volatility contraction on both sides. AGR is a 180 reversal. If it opens flat, I have a bearish bias on that pattern. EXAS is slopping around, no interest. CHK 8050. I don't know, it could set up for a call spread, but see call spread. It's just worried. It's just there's no pattern there to do a call spread unless you're doing the 490s. That's a gap from a buy setup. That's just not the way we do things. This rolled over, still looks lower. This is strong, but too extended for me. Matador 50. All right, so that's one I'll leave. Then we'll come back to see if buyers want to step up. Maybe if it sells off a little bit more. Wow, look at this tail. I don't know if that tail is real or not. We'll come back to it. Aloe, I don't see any prints, but the minder here shows 48 bucks. So that's a 30-minute low candidate if it cannot bounce. This light volume, no pattern. GMED. Now this could be a potential double bottom with a new low plus. I'm just going to set an alarm at 59.40. I can't see any prints pre-market. This would also be a candidate for a gap and crap if it, gap down to like 75 bucks or lower. So that is a candidate. Here, I don't need Walmart here. I'll put that there. IAA. It's a buy setup, deeper tracement. I'll set an alarm 41.50. Wix. Well, it's not a gap and so Alex, we only call gap and crap or gap and snap when it's an excessive gap in the already moving direction. So this is gapping up here. So it's just terminology. That's actually a very bullish gap. But I don't know, we can check it out in the first 30 minutes. This still looks lower. Ideally, I mean, I see it gapping down here, but this pattern, ideally, we would want a 1, 2, 3. Rig still has a void. Well, visually, it's pretty big gap, but it still has a void here. Looks lower. I can't tell where it's gapping, but this pattern looks lower. Oh, we have 3 open shorts. And I have them in windows here. They're all doing well, all three of them. Disney here. We covered a third, looks lower. AIG. We shorted, that's gapping down. And then AEO. Shorted, gapping down. So all our three short, or actually four. We got lit and the ETF trader, that's gapping down. So shorts are doing good. Yeah, thanks. That was in the weekend letter. We were watching it into earnings. Joe. Oh, got a couple alarms going off. All right, so into earnings, we were watching it as a sell setup in here, and then it spiked up on earnings the next day. So that's what we call a potent reversal. And that's why we gave it again. All right, well, I have an alarm. I had an early alarm. I'll go ahead and set it a little higher, but this is a long candidate. Lima whiskey triggering. That was in the weekend letter. So I'm going to set a new alarm, 7780 on this. Lima whiskey. Yeah, Lima whiskey triggered. So that was in the weekend letter. I'll post it later. Hey, our Clorox up alarm. We entered that yesterday. That looks good. Looks really good. 5-minute high. Papa Delta Delta. I posted as a short watch. My alarm just went off. Let's see if it can go sideways here for ideally 30 minutes and then short 30-minute low. Just working on these alarms here. So if somebody wants to watch. IBM, yeah, that was a good short yesterday. Cat. Rob, I can't. Hey, yeah, cat would be a 1, 2, 3-ish. Hey, Rob, I canceled Bumble. And I sent it out in Telegram because it was a monthly expiration and I thought it was weekly in error. The pattern looks great. So if you're in it, I think you're fine. It's just I didn't, somebody corrected me that, yeah, BP looks lower. Yep, that's a big old void. And you got your sell set up with the pre-market data. Yeah, that looks great. You can yeah, short of 5-minute low for a day trade. Looks great. Target maybe 20 MA. GMAT alarm. I'll reset it now at 60.25. Wow, IWM 15 minutes. IWM 15 is a big old double bottom. So we got that void from the trend day yesterday. So, because that's a nice pattern. It's kind of an inverse head and shoulder with two heads. It's only 933, but bulls are off to a little scalping start here. It's still bouncing relative into a bearish daily, where for a swing perspective, we don't want it to go more than 40%. Hey, Greg, here's our options trade from yesterday. Let's see where, because it's 23 DTE, So see, Greg, we sold it for 75, I think, or 70. And right now it's 40. So, I was hoping for a bigger open game, but that's because of the addition. Well, and it's spready also. I'm gonna bid 30 to see if I can get out. But, we were talking about that you don't get the vol crush on those, but at least we can move it to break even now on the day's low. 72.96.